Hi, I'm Peggy here as Global Pegs, as you well know me to foresee. Usually I'm on here bickering on about the crypto, but today I'm going to turn a little bit of a fair play with you guys. I've been pitching the pitch about gold, and I'm getting a little frustrated with a lot of people. I've always been challenged by with gold investments, but I'm definitely here for the source to say this is one that I want to say. Your gold, you should have a little bit of your portfolio, whether it's physical gold or an investment in gold. And I kind of want to share with you guys in relation to that today. So just bear with me as we get through this because it's a little bit of detail, but I'm going to pull you into a little bit of history because I'm a firm believer in what is noted out there of what we call into a history equivalence. So I ask you, there is gold, but wait, is it fool's gold or is it value gold? So it's only for you to determine, because I'm certainly not here as your financial advisor. I'm always here to service you with my opinion. And at the end of this video, I'll be happy to share where I've gathered my read and research, as I expect for you to do the same, because at the end of the day, it is your investment and where you want to be with your gains. Now, gold futures on Monday posted their lowest finish since late February, with the traditional haven failing to find support as investors dumped equities and other assets perceived as risky to dive in as a bear market that is coming, including the U.S. Treasuries and the U.S. dollar. Today, I will only focus to the U.S. side of this gold investment, but have no despair. I am always watching the markets of gold in Asia, South America, and Europe. In the depths of a true equity bear market, and now a broadening China lockdown that's coming back for spreading, are we in a repeat of 2019 and 2020 of the COVID pandemic of panic theory, as gold has not maintained a safe haven interest? I beg to differ. This is only the beginning of what we see. To measure yourself of fool's gold or real gold. A big factor in this past couple of trading sessions is the rising U.S. Treasury yields to showcase gold being a non-interest bearing drive in the bear market. So gold is thereby less attractive, excuse me, showing that gold is less attractive as a source of safety to investors. But which investors are we collaborating with in regards to this? Of the facts well known. As observed, some U.S. retail trends of margin calls are increasing, and that has hit all equity assets, including the SBDR Gold Shares GLD, 0.84% up exchange traded fund, which puts some further pressure on gold. The spread of lockdowns in China could also lead to a slower economic recovery, which would also lessen Chinese consumer demands for physical gold, as stated by Jeff Wright, Chief Investment Officer at Wolfpack Capital. But is this a new beginning to soar with gold values for the physical gold versus the investment in gold? Is this the silver lining for the attraction to note in the second quarter to become the start of the bull market in gold? I ask you, as always, to search and seizure to inspect the values of your investment always. As believed, with today's increase of huge deep pocket investors, there is a turn in gold market as such, speaking as right now in the second quarter from the beginning of the year as well. Is this calm before a gold storm we see to be shed? Jeffrey Gunlock says gold is going to get a lot higher. Egyptian billionaire Naquib Siwaris says a quarter of your portfolio should be invested in gold, whether it be physical or an investment fund. Real estate billionaire Sam Zell, who spent his entire career henceforth arguing against gold, is now buying gold as a hedge against inflation as we see it climbing. Billionaire hedge fund founder Ray Dalio shared not long ago sees a paradigm shift in the market as he compared price movements with historical turning points, which I'm going to go over and share later in this video, as he holds nearly $400 million worth in gold stocks of a hedge, which leads to this bull market as more and more large investors are investing in gold by the tonnage. Gold has rallied more than any other investment, including crypto. And you guys know how I feel about crypto. Stocks like these, as I'm happy to share with you guys in regards to this market as I open it up, taking a look here as we open up to see gold here as the gold line as the sidewinder on top, as a comparison to the DJ in blue with its S&P 500 of the green, the NASDAQ in coming into a dark blue line, as well as to the iShares in purple for the US aggregate bond of the ETFs. And I went over a big statuette of this with ETFs, and I'll go over it again pretty soon. And then here is where we follow into this volatile crypto market of our hero, the Bitcoin. Yes, so as you can see with this being stated on and its values of such, there is no despair to show that as stated on Twitter and other social media mindsets to exploit the variance of gold to not be a good investment. I will shout from the highest mountain as I can. You are fool's gold if you believe this. As we are stepping back in time before our very eyes of testimony with the US market and inflation takes the reign as the housing market increases, which the US Fed used as their hedge with the pandemic, and now more and more see the light as a huge deficit in purchasing from enticing extreme measures as you look back into the gold standard era of 1934 with Roosevelt to call all Americans must turn in their gold and sell the American people out with no justification in returns as a bailout of America with the UK to hold gold as leverage, like you getting a loan and borrowing with an agreement of a standard. Yet we see the markets return with the same devaluation again in 2008 of 2009 of the number 2 Bush administration to falter with the oil crisis from the 1980s in Ronald Reagan's era, and see the repetitive investment of gold. Then to now, I believe gold is definitely a safety net to cover upon these outcomes of crisis, and see the repetitive investment of gold then as to now. The diversity in what can establish to what is then as the end of the Cold War to what we see in this devastation of a new war that has uprised with Russia and the Ukraine in oil again. So I'm going to share with you again what these margin lines are showing of an increase from back then into now. So opening up the first one I have of a historic, this is in the 1970s, right after Nixon did its bleed out of the gold standard law, a historic 2,300% leap. This takes you into the 1970s up into the 1980s of showing this market for its different shares of despair. And then growing into this, as I was just sharing with you guys soon enough of what happened back in 2000 and going into 2008, going into the number 2 Bush administration, you can show that the gold tripled in its value line. So when is gold going to triple up again? It's coming, my friends. Make sure you have no despair of yourself and know what your knowledge is and know where your reading source is to do your reading research. Although gold for June delivered its GCOO at 1.28% as an increase, its GCM22 as 1.2%, it fell $38.30, or better yet, 2% to settle at $1,896 an ounce on the COMEX being the Chicago commodity market exchange in Chicago, Illinois. This was the lowest finish for a most active contract since February 25th of 2022. Now, silver, just to throw in a little verb of that, because I always like to balance out with gold and sister, because there's always a brother-sister act, gold being the big brother, silver being the sister. Same thing with my Bitcoin. When I talk crypto, it's Bitcoin and Ethereum, and then all the little players of the siblings follow below. But May and silver, it turned out with the SIK 22 of a negative 0.17% for a loss of 59 cents, or rather a 2.4% to trade at $23.67 an ounce, the lowest settlement since February 16th. Silver on Friday logged a 5.6% weekly fall. Yes, as investors appear to be fleeing the safety net of the world's reserve currency and the U.S. Treasuries, rather than its traditional safe haven of gold, I ask you, where will your market values be when there's a rise of the Treasury yields that push this rate on the 10-year note of 2.869% to a level last seen in December of 2018, with last week as investors penciled in an increasingly aggressive Fed response to inflation running at its highest in more than 4 decades. This is a crisis series of what I see more and more together of what we can share in moving forward of what we see as an increase. I just want to share with you an open market of showing what this gold rate is of oil versus a 30-year rate versus gold. And as you can see, gold holding its signed 1-year average of not a down increase pour, but showing that it's holding its percentage value of an increase. And here we are with oil. And what are our oil prices doing today? It's a catastrophe of what people are having to pay across the universe in the United States, for one, to shelter of the values in just getting a tank of gas. But there's no increase in job employment. There's no increase in the value of increasing of funds for the people to be able to have spending factors, but yet the supply and demand is going up. This is an increase of value that cannot be shared with more and more to show of its own. This is one that can only shelter to show that back even then, with the Great Depression, of showing its value line markets, of showing this, I show you the gold price that was adjusted for inflation. Looking at it from 1920, the value of gold was $450 an ounce of its pronunciation, going into our war in our 40s, which we never really even came out of, into the 30s of its depression. Because let's face it, our depression value with inflation was showing this. But as our governments have always instituted into their better morals of value, they want to streamline the thinking that people would not be justified to show it without the inflation barrier. As you can see, duly noted, the gold price was not adjusted for it. This is where it came into play of even into the 30s, going into what Roosevelt did of buying out and requesting all Americans turn in their gold, and those who decided to stick their gold in their mason jars and plant it into the Mother Earth of security, that was one hell of a security net for them. And good for them that they toppled to the states of making sure they were aggressive in their movement. Now, making sure to show into the gold charts as well, I just want to be able to show this exhibit of moving forward of gold versus any of the other stuff. I want to take this back of showing you, remember, the sidewinder of gold might be of its value, but it is beating all of the markets in today's market share stamp. So making sure that the increase is known for this better value, there are more of what I call the hush investor that is investing in gold today, which some I just read to you, and I'm sure you had no details of knowing for this value knowledge. This brings me to state that I believe that the U.S. market will make a gratifying turn into gold. This bull market will target, as it did in value, more than what I think 2,500 to even 4,000 US dollars in value of an ounce of gold, which we have not seen this increase since the market moved when Nixon removed the gold standard and the people sang and sang loudly. I believe the markets dictate a sincere extreme to denote the value in gold, because they know if the people put their value in this commodity metal, this will be a huge fault to the U.S. Treasuries that are in a despair as we speak this minute with the feds. Which, granted, as I give a little history, after purchasing gold at the pair of $20.67 an ounce from its citizens, the U.S. government under President Roosevelt raised the fixed price of gold to $35 an ounce using the Gold Reserve Act of January 1934 in an effort to increase inflation, at which today's government, using this hedge with a U.S. Treasury yield, you can only see the values denoted that the taxpayer must pay for many years to come. Understanding gold prices and historical events during the Great Depression can help provide a more informed opinion on what could happen in today's macro environment. Gold prices are influenced by inflation, and the money supply and the inflation environment during the 1920s, which I just shared with you, appears somewhat similar to today's inflation deflation environment, hence the factor of a bubble. Gold prices were fixed during the Great Depression. However, history still rhymes, and the government's actions during this period could potentially create the government's playbook for today. Like I say, sometimes you always have to stiff yourself back into sharing what might be into the better values aligned with whatever is hosted for the market in its value price for today. Now, I want to share this screen with you showing what this trend might be coming up into the gold market values. You can see where it has played its role from 07, bringing into its values of what has been historically marked into 2020. So I ask you, and we're at 1908 as we speak in the market values of today. This is not a sidewinder, although when you compare it to other values in a market, you can see what I just showed you. This is a trend market to show that gold is a value source for you as an investment, whether again it be physical or if it's an investment source. As you can see, in the 1920s were relatively calm, followed by a period of deflation, which they considered as the Great Depression, accompanied by the government raising the price fix from $20.69 an ounce to $34.69 an ounce, causing this inflation adjusted value to grow through the roof. I'm not sure we can draw a correlation between gold prices then and now, but take it from what you will. And as you see here, the same chart that shows without the fixed inflation, I'll pull this up again to show that comparison where I was just showing you guys the differentiations of what the gold value lines are for exhibited in this market. You can see the gold price was adjusted for inflation here, looking as I was showing, going from the 20s where they had a pace even score of this, with its mercantile going for the adjusted inflation. They showed it where Roosevelt came in, bought out the Americans at $20.69 an ounce. That's what the Americans got of their value, and sold them out at $35 an ounce to hedge fund this into the inflation market, going into what we know as another war into the 40s. So as a despair, this is a correlation that seems to be fit. What is your value line of that market? As we see this same trend flow with the Bush administrations, which I showed you in the 2008-2009 period, the CPI was flat, and yet gold rallied from 2008 onward. That's right, the oil boom hit a crash in the market from the 80s with Reagan, and justified itself into the Bush administration, going into number two's Bush administration, where gold's rise paused and began to decrease again from 2011 through 2014. And then it began its ascent from 2015 until today. The Federal Reserve and the US Treasury are issuing debt and printing money like there has never been before. Many people see gold continuing its upward trajectory to anywhere between 2,000 to 10,000 per ounce and beyond. And this is what you will see live in a trend world moving forward. As I carry on forever with gold and precious metals, I will conclude with this measure and note to all my European friends that I have not even touched for sourcing from the time lapse of speaking, and gold globally I share. If we are in a time period that rhymes with the Great Depression from 1929 to 1932 to present then, it should be expected that we will enter a period of severe deflation. What goes up must come down, hence the factor the world bubble. In order to stem this deflation, the US Treasury, in connection with the Federal Reserve, will be creative to a sincere move that what they already have done. As long as this is the case, look for continuance with an upward pressure on the gold price. And hopefully this doesn't mean the US Treasury will confiscate your gold as a repeat effort at a price of their choosing to sell you out in a foreign exchange with no gratification. If you don't own physical gold, you could buy a general large cap gold of miners ETF. Look for the public market carriers for an investment, or if you choose in a volatile market, you could go to a smaller public gold mining company. This would be a little more volatile and a risk factor, but could be a little bit more less involved as your investment if you're not comfortable with doing the physical search for having or hosting physical gold. Why am I sharing this? Because I do see the bull market grow with gold as a physical or investment. And I always like to adhere as to what I see repeat as humans. We only show the values this way, yet fortunate with technology. There are more, as I say, in tune for a better outcome for people to choose their own strengths in any game. As always stated, I am not your counsel or financial advisor, strictly my opinion shared and always open to yours as well. Reach out anytime and I'm happy to discuss and hear what you have to say and your values or what your gains are. Listen, I share this information as myself and I express my own opinions. I am not receiving compensation for this information that I have shared with you. I have no business relationship with any companies whose stock is mentioned in the details that I have just opened up to you. What I'm trying to say is it's out there for you to do your read and research, but take your time, but not too long, for what you value of the statuette in gold. Make sure that you shine and you shine bright to what your value is. I only wish you the very best. I'm Global Plegs, signing off to you, and I only wish you the very best and carry on with your investment. Ciao. See you soon.